Most traders lose because they trade into traps, not setups. But what if I told you the market is designed to induce you into taking those losing trades? Today I'll show you why liquidity and inducement are critical for smart trading and how to use them as a powerful confluence tool in your strategy. This concept changed my trading life forever. When you understand how liquidity and inducement work together, you will never chase price blindly again. Let's dive into liquidity inducement. It's the first episode. We are gonna continue these episodes. Why we should learn liquidity and inducement. There is no other way for you, or you find liquidity or the liquidation finds you. And put the BS of those technical traders aside. Yes, we retail traders are 4 or 5% of the liquidity of the markets, but I am 180 pounds, but my blood is 10 pounds. My food is about 2 or 3 pounds a day. So the liquidity is the blood that is necessary and streaming into the markets. The other thing is the market makers or the operators or the smart money. They have enormous amounts of orders. They don't enter trades with 1/10 of a lot or one lot of trade. They have tens of thousands of trades every day. And they need the opposite side of the market to fill those trades. When you want to buy groceries, there should be somebody that sells it to you. And it's not different from, for example, Euro to USD. When you want to buy a lot of Euro USD, you need a lot of sales. And imagine big institutions want to buy millions of Euro USD daily. So there should be opposite orders, which is the concept of liquidity. And for personal use, the most important thing is that you should have a trading edge over other traders. And the only edge that is possible to make you a profitable trading, in my opinion, is liquidity. Go and study the charts yourself. You won't see a single trade that started to go high or low before grabbing a high or a low, before grabbing some kind of liquidity that we are gonna cover in these episodes. Liquidity and inducement is the sharpest and the most powerful edge that you can use as a tool for more confluences in your trading methodology. The other thing, especially in the context of social media traders, it's that it's not some hallucinations, it's not some rectangles and triangles that some guru is talking about. It's the real thing. When you want to buy something, there should be sellers and vice versa. And that's what is happening on charts every single minute. And at last it worked. Us, the traders, always look for better setups and look for something that works for us, and the liquidity inducement is that concept. But what are liquidity types that we are gonna cover in these episodes? First is time frame liquidity. Daily highs and lows, for example, is a kind of time frame liquidity. Algo 1 liquidity, the early traders, relative equal highs and lows. Last high before main high and last low before main low, consolidations or accumulation phases, transaction liquidity or pullback liquidity, and even the PDRs, that all pure ICT traders, which I believe that no one of them are making money, are talking about every day. These are useful, but with confluence with other concepts. But how to use liquidity? Some of them are price action traders, some of them are fundamental traders, some of them are smart money traders or volume traders. How you can use liquidity in confluence with your methodology. And if you have question, even if I have a left hand or not, I have the left hand, but it's in pain because of my keyboard, so I'm using just the right hand. For confluence with your methodology, you should find it before your POIs. You may use support and resistances, you may use order blocks, you may use volume levels. Always look for those traders who entered the trade before you. For example, if you are using support and resistance, for example here, or an order block like here, you can see these traders and these traders enter the trade very fast and maybe too early. After grabbing these traders, it's the best opportunity to enter the trade. You can see that it started selling off from here, but these traders and these traders are early. So it grabbed those liquidities and then started to go lower. The other thing is that find confluences with your other things. For example, if you are using moving averages, you can use this as a confluence. Or if you are just using pullbacks to trade after a big movement, you can use the liquidity on the left of the chart for more confluences with whatever you are using. The other thing is that when you found your POI, for example, this order block and your point of liquidity, you go to lower time frames in this point and look for trading setups. For example, a simple break of the structure to the downside and a POI or an imbalance here can be a very good entry setups in lower time frames to increase your win rate and reward risk ratio. And the most important thing that you should learn at the day one of your trading journey is always be pro trend. Use something that keeps you in the trend direction, and always use liquidity pools, use your POIs and confluences to enter the trade toward the direction of the trend. And always remember this sentence: if the market is going down from the left side of your monitor to the right bottom side of your monitor, it will continue its movement even under your desk. It will not stop until it hits a very high time frame POI or the fundamental sentiment of that asset reverses. You can see that in this chart we have the confluence between this support and resistance, this order block, the liquidity grab, the moving averages, and even I know that in lower time frames we have an entry here. So what I mean by confluence is that which methodology you are using, you can use the liquidity grab like here or here to enter at better prices. Thank you for your watching. Don't forget to subscribe. 90% of our viewers aren't subscribed to this channel. This channel can help you and can motivate me to learn and make more videos. Thank you very much. And if you have any concerns or questions, you can send that into comments.